You know that one default choice in your 401k? The one you probably clicked without a second thought? Well, what if I told you that one little choice is very likely secretly, and I mean secretly siphoning tens, if not hundreds, of thousands of dollars from your future? Okay, let's dive into this.
I bet you think you're doing everything right. You're saving your money, you're investing, you're playing by all the rules. But what if the game itself is rigged? What if the system has this built-in leak? We're going to expose this incredibly costly error, and more importantly, I'm going to show you the simple fix that could completely change your financial future.
Okay, before we get to the big one, the number one mistake, we have to talk about two other really common, really costly errors. And honestly, this first one, it's the most painful to even talk about. It's like finding a winning lottery ticket on the sidewalk and just walking right past it. I'm talking about leaving free money on the table. Look at this number, 100%. That is a guaranteed return on your investment. Let that sink in for a second. A guaranteed 100% return. You can't find that in stocks, you can't find it in real estate, you can't find it anywhere else on the entire planet, and yet millions of people turn it down every single day. This analogy just nails it. Imagine your boss walks up and says, "Hey, for every single dollar you put in the savings jar, I'm going to put $1 in right alongside it." What would you do? You'd scrape together every spare cent you could find to put in that jar, right? Well, your 401k match is that savings jar. It should be your number one financial priority to contribute enough to squeeze every last penny of that match out of your employer. If they match up to 5%, you contribute 5%. End of story. Not doing it is literally saying no thanks to a part of your salary. Okay, so that's the free money mistake. Now let's talk about the second big error. This one's a little sneakier. It's about a choice you make today that can create this massive ticking tax bomb that's set to go off right when you need your money the most, in retirement. So this is super important to understand. It's all about a fundamental trade-off. With a traditional 401k, you get a tax break now, which feels awesome, right? Your contributions lower your taxable income for the year. But, and this is a big but, the deal is you pay taxes on everything later. We're talking your original money and all the growth it made. Now look at the Roth. With a Roth 401k, you pay your taxes up front, but in exchange, every single penny, including decades of compounding growth, is yours 100% tax-free when you retire. No strings attached.
So it all boils down to this one question. You have to ask yourself, do you think your tax rate is going to be higher or lower when you retire? Think about it. If you're early in your career, you're probably in the lowest tax bracket you'll ever be in. And, with government debt being what it is, do we really think tax rates are going to go down in the next 30 years? Probably not. So paying the tax man now to lock in a future of completely tax-free income, that could be one of the smartest money moves you ever make. Okay, we've covered two huge mistakes. Not getting your full employer match and ignoring the Roth option. And seriously, just fixing those two things puts you way ahead of most people. But they aren't the silent killer. They aren't the one that works by the slow, methodical drain on your account year after year after year.
And here it is, the number one mistake, the silent killer, is blindly trusting the default investment in your 401k, which for most of us is the target date fund. It's the default for a reason, because it's easy. It's sold to you as the perfect set it and forget it solution. And you know what? That marketing slogan is the entire problem, because blind trust is exactly how the financial industry makes a fortune at your expense.
Okay, let's really break this down. The expense ratio, this is the silent killer. Think of it as this tiny parasitic fee. It's a constant drag on your money. Imagine your retirement account is a big ship on a 40-year journey. The expense ratio is like a tiny, tiny leak in the hull of that ship. In the first year, you barely even notice it. But over 40 years, that tiny, constant leak can literally flood your boat and sink it just before you reach the shores of retirement. And this chart, this shows you the real-world cost. Forget the analogies for a minute. These are the cold, hard numbers. On the left, you've got a typical, high-fee, target date fund. On the right, a super simple, low-cost portfolio you can build yourself in minutes. We're assuming the same exact contributions, the same exact market returns. The only difference is that tiny little fee, that leak in the boat. $145,000. That's the difference. That is what convenience cost you. That's the price you pay for set it and forget it. And here's the key. This money isn't lost in some big market crash. No, it is methodically transferred bit by bit directly from your retirement account into the pockets of a financial company. For a service you can absolutely do yourself in about 5 minutes a year. And it gets worse. Beyond the outrageous fees, there's another huge problem. The fund's automatic strategy, what they call its glide path, is totally generic. It's a one-size-fits-none solution. It has no idea who you are. It doesn't know about your other income. Maybe you have a pension or some rental properties. It definitely doesn't know your personal comfort level with risk. A generic solution is almost never the best solution, especially when it comes to your money.
Okay, so that's the bad news. So what's the fix? How do we stop the leak? How do you claim that six-figure sum of money that is rightfully yours? It's simple. You stop trusting blindly and you take back control. And I know that sounds complicated, but I promise you it's not. Here is your simple step-by-step plan.
It really just breaks down into these 3 easy steps. Super simple. First, we're going to investigate what you have right now. Second, we're going to find the hidden gems inside your plan. And third, we're going to build something way better, way cheaper, and a whole lot more powerful.
Okay, here's your homework. Tonight, log into your 401k account online. Your first mission is to find the expense ratio of whatever fund you're in. Find that number. Now, if it's over 0.50%, that's a 5-alarm fire. That's an emergency. Okay? Then your second mission is to look through all the other investment options your plan offers. You are on a treasure hunt for these specific types of low-cost index funds. Things like an S&P 500 fund or a total stock market fund. These are the good guys. They don't have fancy managers trying to beat the market. They just track it, which is why their fees are rock bottom. These are the building blocks of real wealth.
So once you've found those low-cost funds, you can build your own simple, powerful portfolio. And no, you do not have to be some Wall Street genius to do this. This slide gives you some really common sense starting points based on how far away you are from retirement. See how as you get closer, you add more bonds? That's just because bonds are generally safer, less volatile than stocks. They help protect your money as you get closer to needing it. But look, the key isn't getting the percentages perfect. The key is that you are the one in control, and you have just slashed those wealth-killing fees to the bone.
And just by doing that, just by taking these simple actions that honestly take maybe 10 minutes of your time, look at what you've done. You haven't just saved a little bit of money on fees. You have fundamentally changed the entire trajectory of your financial life. This is, without a doubt, one of the most profitable things you will ever do for your future self.
So I'm going to ask you again, what's your expense ratio? This is the moment to take action. Go log into your account. Do it right now if you can. Find that number. And listen, if it's high, don't be embarrassed. You're not alone. The important thing is that today is the day you found out. And today is the day you fix it for good.
And really, that's what this all boils down to, isn't it? The single biggest mistake you can make with your 401k isn't some big, flashy trading error. No, it's the quiet, sneaky mistake of blind trust. It's just accepting the default without asking questions. But now you know the truth. And now you are officially the manager of your own financial destiny.